As the IPO market finally starts to peter out, we have one last big deal to talk about, but don't call it an IPO. See, tomorrow, Slack Technologies is coming public. It's coming up via what's known as a direct listing, which is where the company lists a block of pre-existing shares on an exchange. Now, you might remember that's what Spotify did, the same thing last year. An IPO is normally about helping a company raise money, right? But with Slack's direct listing, they're simply trying to create a liquid market where their employees and early investors can ring the register on their shares, make some money, take it off the table. The thing is, even though a direct listing is a pretty boring way to come public, there's a ton of excitement for Slack. You probably know their product. Maybe you even use it at work. Slack is a collaboration software company that has taken the world by storm. They're revolutionizing the enterprise communication space, even displacing email at many companies. Now, just like we saw with CrowdStrike earlier, Slack is right in the sweet spot of what's working here. It's a fresh-faced, cloud-based enterprise software play with a subscription business model and a turbocharged growth rate. This is exactly the kind of stock that investors, they just can't resist it. They can't get enough of it. So I expect this one to run tomorrow. And that's why we're trying to get ahead of this deal by giving you a sense of what Slack does and how it's doing and why it might be worth owning. Let's start with what Slack is for those of you who actually don't use it at work. Originally, this platform was conceived as a way to replace email at the workplace because email is kind of a pain in the neck. I mean, it's not necessarily the best way to work. So Slack replaces individual email inboxes with team-based chat channels where you can also post relevant data, documents, and applications. Over time, it turns into kind of a repository of organizational knowledge and wisdom. Think of it as a communications tool that gets everybody on the same page. And that's what Slack does. But how does it make money with that? Okay, Slack works on what's known as a freemium model, like many other software companies, including Wix, which we'll hear from later in the show. There's a free version of the program, which limits the number of messages they'll host and the number of applications you can integrate. Then there's a paid subscription version with no limits and a higher price subscription that has additional services like compliance, reporting, and guaranteed uptime. The idea is that free users just love it. And then they convince their bosses to adopt the paid version via word of mouth. Hey, we saw something very similar to this with Dropbox. And this thing has been grown leaps and bounds. At the end of January, Slack had more than 10 million daily active users. The platform was being used by more than 600,000 organizations with 3 or more users. That's incredible growth. Only 95,000 of them are paid customers, but that includes nearly 2/3 of the Fortune 100. Boy, when we first had them on, it was nothing like that. Some of the largest enterprises have tens of thousands of employees using Slack on a daily basis. How about the numbers? The numbers are the reason why I'm betting Slack will generate so much excitement. Last year, the company had 82% revenue growth. These companies, 80, 90, 100, 120%. What an unbelievable group of growers we have in this market. Now, admittedly, it's slowed to 67% in the latest quarter, but it's still pretty darn good. While Slack is still losing money, that's all right. Its margins keep improving, and this is another situation where it would be financial malpractice for this company to be showing a profit. They've got too many opportunities that are too good to pass up. You have to understand that showing a loss at this point in your growth is okay. What about the company's specific metrics? Slack's paid customers increased 49% last year and nearly 42% in the most recent quarter. Its paid customers that are worth more than $100,000 a year in revenue grew by 93%. Net dollar retention rate, I mean, how much business they're getting from old clients, came in at 138%. I mean, wow, these are flabbergasting. In short, Slack's overall growth is fantastic. All right, maybe it's not triple digits good like CrowdStrike, but it's still fantastic. The company's on the path to profitability. Balance sheet is fine. However, Slack's free cash flow is less than ideal. They've been burning more and more cash of late. The company increases its investments. Okay, I get that. I can live with it. They want to increase their investments to grow faster. The best thing you can say about Slack is that it passes the verb test. Google, Venmo, Uber, they're all services that became verbs. They're so ubiquitous that we don't even think about it. Don't believe me? Google it. Or better yet, Slack us your concerns. That may sound like I'm being glib, but you know what? It's genuinely a really big deal. Look at it this way. We're talking about a cloud-based enterprise software company, something investors can't get enough of, right? You agree with me so far? With the turbocharged growth rate, they want that very much. It seems like the revolve was up 7 today. I mean, it just keeps happening and happening and happening, which is why I'm trying to get you in some of these. The recent spate of red-hot IPOs may have desensitized us to hyper-growth companies. Fact is, the Slack's in great company with these financials. Plus, the collaboration software space in particular has been really strong. Witnessing one of my faves, Atlassian. It's up 49%. That symbol's team, by the way. I think Slack is superior to Atlassian in nearly every way that matters except profitability. Will investors care that Slack is still a long way from generating positive earnings? It doesn't seem to matter to anyone who's buying up that CrowdStrike, does it? No. Now, I think there will be a ton of excitement for the stock, but that doesn't mean things are perfect. I do have some concerns. We don't know how effective Slack will be at converting its existing free users to paying ones. I'm optimistic, but you know what? I was optimistic about Dropbox with the same model, and Dropbox, frankly, has been dead money for the better part of a year. I thought the freemium was going to work better. Where Slack has an unusual capital structure, which means its public shareholders won't have any real voting power. This has become increasingly common with tech, though. The unicorns do it. I hate it. Why? Because if something goes wrong, you and your fellow shareholders have no real recourse other than to dump the stock. There's no democracy here. You can't throw the VC bums out. Worst of all, 9 days ago, when Slack announced its guidance for the second quarter and the full 2020 fiscal year, it had some hair on it. In the quarter, revenue growth has slowed from the high 60s to the low 50s. For the full year, Slack is forecasting more like 47 to 50% revenue growth. That said, management told us this guidance only includes high visibility revenue. So maybe they're just being conservative here, and they're maybe doing a little sandbagging. With that in mind, how much would Slack be worth when the stock starts listing tomorrow? It's under the symbol WORK, easy enough, right? WRK. What should you be willing to pay for it? Okay, the highest price paid for Slack in the private market was $31.50 a share. Tonight we found out that Slack's reference price is going to be around $26. It's going to be $26. Given that we have the company's own full-year forecast and a couple of analysts who've already rolled out coverage, we can actually get a decent sense of the valuation here. At $31.50, Slack will be trading at 28 times this year's sales, 19 times next year's sales. Very expensive. Nothing else in Slack's peer group comes close. Having said that, it's much cheaper than recent IPOs within the rapid growth rates like CrowdStrike, like Strike, like Beyond Meat, like Zoom Video. This is much cheaper. At the reference price of 26, it trades at 23 times this year's sales, 15 times next year's sales. Again, cheaper. Where might the stock go? D.A. Davidson has a $31 price target on it, roughly in line with what people have been paying in the private equity market. Private market. Atlantic Equities just initiated coverage, $37 price target. As for me, here's the bottom line. I'd be willing to give Slack my blessing to get this. I'm willing to let you pay $40. $40. That's well above. Now, if you can get it below that, that's even better. If not, you keep your bat on your shoulder. Slack is a great story. $40. But we still got to be disciplined if you want to start a position in this one. This market is so hot, I don't want you to get burned. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.